traders, welcome to the TMT Stock Market Strategy video for Wednesday, October 12th. We did get a nice sell-off today. Very refreshing to see markets pulling back, or at least they're able to pull back, having 3 months of literally just sideways price action. Of course, within that 3 months, we did get a couple of down days, but it was nice to see some selling. And part of the selling, part of the issue was that now they believe that the rate hike will come sometime in December. Fed Fund Futures now pointing out to a 68% increase in interest rates by the December meeting. So that, and along with a couple other things abroad, brought the markets down today. So one day does not make a trend. We do want to use caution. We don't want to just go look to short the market. But it was nice to see that the markets were at least able to sell off, at least for the one day. Anyway, have a lot to cover. Let's get right to it. As of right now, we continue to have TMT trade model still on a sell signal. Just wanted to let you guys know. Many of you actually email me on a consistent basis if the trade signal is still in effect, and it is. And it's still valid. And believe it or not, remember, if you recall, it's been valid for I believe almost 3 weeks, 4 weeks now, while the markets were still going sideways. But part of what you see in front of you is the advanced decline with volume. It's one of our components in our trading model, and many of the breadth of the market indicators are pointing lower while the markets were going sideways, which is a huge sign that in the short term, markets are looking at least to break down. And we talked about the spiders. Our first target is going to be about 210, and then we will reevaluate. But you can see here clearly, guys, that markets are not doing what it was like to do. If you could see here, we had moving up and erratic behavior, price action here into that pennant formation, like I had mentioned just yesterday in the video. So you could see here that we're not spiking up like we did here. Okay, so yes, markets are looking a little tired and looking for possible movement to the downside. And again, like I said, one day does not make a trend. Let's take a look at volatility. The put-call ratio is not overly bearish, so that tells me that there's still plenty of room to run to the downside. Average true range is right around here. Now, did curl back up again. We want to take this little 20 area off the average true range to move back higher. And when the average true range move higher, price usually moves lower. Okay, that's the average true range with the S&P. Let's take a look at the VIX, the VXX. This is one of our trading systems that we use. It has not gone officially on a buy signal as of yet. And it's quite subdued. But I will tell you, if we get some panic selling, we get some decent selling, you're going to see this VIX explode, the VXX, or any other VIX instrument, if you will, the UVXY, the VXX, because it's heavily shorted. There's tons of shorts involved in here, and this hasn't even begun to get going to the upside. Upside target, we're looking at around 47.40. That's a 38% retracement. Anywhere around there, give or take 45, 47. But it really needs to get going here. We want to see some good price action, a lowered volume behind it, which we did get today. All right, next is going to be yields. Let's take a look at the interest rates, and I've showed this to you many times. Back in early September, I said we have a nice ascending triangle, measures up to the 185, and sure enough, looks like we're getting there. We might pull back a little bit again, but keep an eye on these rates. I do believe that rates have made a generational low, and we have begun an interest rate rising environment. All right, take a look at the TLT, and I wouldn't short down here because if we do get a real scary sell-off, bonds will go to safe to quality, a safe haven trade where they'll park their money. So we'll do get a pop back up again where rates will roll over at least a little bit, but that will give us a great shorting opportunity right into the 136, 138 area is what I'm going to be looking for next in the TLT. Next is going to be crude oil. Many of you wanted to see this chart again. Look, guys, 10 days, 8 out of 10 days up. We're into heavy resistance here. The weekly chart has a nice big inverted head and shoulder. I just didn't have enough room in this video to point out, but you might want to take a look at it yourself. which would measure to somewhere around 77 if that weekly were to break out. Remember, that's a weekly chart. It takes a lot more energy than daily, especially when you're up 8 out of 10 days. Look for a pullback maybe to the 45 area, 46, 47 area. Look for that higher low from this previous low, and then that's when you really want to get in for the breakout. Not here, not right now. There's many talks going on where a lot of the energy ministers of Saudi Arabia speaking, Russia talking, pulling the crude oil back and forth. There's a lot of supply out there. There's 10 plus tankers out there in the Mediterranean just floating around waiting for somewhere to dock so they can unload their oil. So remember, guys, this is all hype now. This is all media hype. This hasn't begun yet. Nothing has even happened. And this is up 8 out of 10 days. Can you imagine if they don't talk or the talks break down? This thing will honestly, crude oil will get down to probably $41 in a matter of 2 or 3 days. So be careful here. Use caution. Let it come back in. Never chase. Never chase. Take a look at gold. And remember, I mentioned yesterday morning about the UUP. We had a big breakout in the UUP, and I'll show that chart to you right after I get to this gold trade. I'm looking at gold to come right back into this 50% retracement, right around 1212 to 1220. If we lose that, we're gonna flush right to the 1200 area and possibly get to that 61.8% retracement, which to me is where I'm looking for a base building, and then look to take out that base higher, and that's when you want to get long gold. Okay, here is the UUP I showed you yesterday. We did take that out on a closing basis, this current swing high. Remember, now this other swing high we want to take a look at is this next current swing high that we need to take out. But again, we had some big explosive moves. Look for, I would say, at least a pullback, fill the gap a little bit, and then look look for the dollar to continue to move higher. Beautiful strength here in our MACD and RSI. So nothing wrong with this chart at all. Remember, I had mentioned, guys, don't count the dollar out. Even we were down here back in late August. So just wanted to let you guys be aware of that. Next is going to be GLD. And again, looking for price to get down to somewhere around the 118 area, 120 area, and then we would reevaluate it. I'd even love to see it get down to 115, honestly. That would be a great little spot to start looking to get into. GDX, right up in this here, you see this little supply area here. This is where we'll be looking for some continued base building and look to get long the GDX. Let's get into the indexes. And you can see here, spiders, we did break down from our pennant formation. And remember, we have this big bearish rise and wedge, guys. We touched it right to the penny here today. And I'm looking for a 210 print here. 210 is going to be the first objective target off of this rounding top, if you will, and then break down. So 210, which is not that far off. It's $3, but I like to see the 210 first get involved, and then we would reevaluate for any other further downside targets here with the 50%, 61.8%. But let's get to that target first. You can see we did break down on a closing basis, so looking constructive for some further downside. 60-minute, just wanted to show you here, 212.50, we got really close, and that was pretty much it for the day. And we're not really so oversold, so we can still move lower on the 60-minute chart. Transports, wanted to show you we did fail here at the highs yet again. But again, we still have inside days. I want to see some further weakness here that would confirm market sell-off. Same thing with IWM. You can see here that we did move lower. We hit the 23.8% retracement. I'm looking for a 38% retracement here, at least to get started with this move lower. And you can see here lower lows and lower highs in our MACD and RSI. And last is going to be the Qs. Apple had a big gap up into the 119 and sold off all of their gains. It was over $2 gain and sold off back down. And I had mentioned in Apple that I would be selling any spikes in Apple, big spikes now. I'm not saying just to get short at 115. Any spikes higher pretty much would be faded. And sure enough, that's what's been happening the last, I'd say the last 2 to 3 weeks. So keep an eye on Apple as well. Okay, guys, have a great day. Hope it helps. And we'll see you on the next update. Take care.